Thank you, Mr. Chairman. I live on an arable farm in East Yorkshire with my wife Julie and our two young sons, James and William. We farm 300 hectares, part owned, part tenanted, on flat, heavy land where we grow wheat, oilseed rape and vining peas. I started actively farming at the age of 24, following the sudden death of my father, before which I worked as a fertiliser trader for Cargill PLC. So why a Nuffield Farming Scholarship? Having farmed since 1993, an element of routine had set in, and I felt the need to push my boundaries and challenge what I do. With a commercial background, I wanted a stimulating topic that would challenge me, but would allow me the opportunity to visit and meet both farmers and businessmen alike. I wish to see the underlying principles and concepts that I could hopefully use at home in Yorkshire and that could potentially lead to future opportunities for our business. The subject matter I decided upon was therefore external capital in global agriculture. Since the global financial crisis of 2008, which brought turmoil to the financial and property markets in much of the developed world, there has been renewed interest from external investors in agriculture. Why farmland? As Mark Twain said, buy land, they're not making it anymore. There are many reasons. An increasing world population that is estimated by the UN to be 9 billion by 2050. A trend of increasing meat consumption in developing countries, like China, due to higher disposable income. The loss of land due to urbanisation, degradation and climate change, and the use of crops for energy production. The combined effect is mounting pressure on the production capacity of the remaining or potentially virgin agricultural land. Land values have risen consistently over the long term, not only in the UK, but around the world. Australia and Argentina all show similar patterns. Land values and agriculture have consistently performed well or in line with other investments such as equities, bonds, commercial property in the UK and around the world. Whilst on my study tour, I spent time in the UK, as well as southern Russia, Chicago, Argentina, Uruguay, New Zealand, Australia, and Singapore. I was fortunate enough to attend conferences, talk to land agents, investors, asset managers, and visit corporate farms. There are many methods in which external capital can be invested in agriculture. Listed companies are one. One of the problems with agriculture for investors is the liquidity of money. This is best solved when corporate farms are listed on the stock market in vehicles such as black earth farming. When it comes to listed farms, they do not come much bigger than black earth farming, with 318,000 hectares in southern Russia. Professionally run farms with large fields of quality land at affordable prices. A panacea it is not, though, with similar problems to UK farming of labour, climate and politics, though magnified. Foreign exchange is of utmost importance in global agriculture, and black earth farming attributed $5 million US dollars of its losses due to currency, out of their $41 million US dollar loss in 2011. Agricultural funds are a second type of investment model. There are a number of these who offer direct exposure to agriculture worldwide. These tend to be for high net worth individuals or institutions who own a portion of the fund. For these, I thought I ought to travel here. But Julie sent me here. But Argentina was great. And having spent time with funds like Fondomonte and Calax Agro, what was obvious was the professionalism of these corporate farms on the ground with the use of direct drilling techniques and GM crops, but also the high costs associated with both administration and accounting. The need for a Big Four accountant and different corporate vehicles add greatly to the overheads in these corporate farms, even though they may have very low production costs. Therein lies the paradox. A third vehicle is the classic landlord-tenant model, which is the most common format throughout the world. The US pension fund, TIRCREF, with $2.5 billion US dollars invested in land worldwide, was renting out wheat-growing land for about a 5% return on capital in Australia. This is far in excess of the UK's rental potential of about 1% for agricultural holding act tenancies and a slightly higher figure for farm business tenancies. The ultimate exposure to agriculture is through direct and active ownership. Throughout the world, the Middle East sovereign wealth funds and the Chinese are certainly active in this sector. Middle East investors are definitely buying large commercial farms like this one in Argentina, which was sold to the Saudi firm Almeria weeks after I visited. These farms, as well as offering sound investment, also offer a degree of food security to the Middle East. While travelling in Australia and New Zealand, the press and public appeared to be obsessed with the Chinese buying farmland out there. But at the end of the day, of far greater concern must be the buying of secondary processing facilities in countries like Australia. By doing this, the Chinese will ultimately have far greater control on food and the potential to secure food products of the right quality and price for their own country. However, land ownership around the world by foreign nationals is definitely a very political issue in most countries. In Argentina, since December 2011, the maximum new land holding for any foreign individual is now 1,000 hectares in the core regions. In the US, although there are no federal restrictions to foreign ownership, restrictions do vary from state to state. Foreigners at the moment cannot own any land at all in Nebraska, North Carolina, and Oklahoma, while in states like Colorado, Hawaii, and Iowa, foreign nationals must reside in the US to own land. So why invest in agriculture? Strong fundamentals, demand for land and soft commodities. Stability, stable returns in recessionary times. Inflation hedge, historically a tested store of value in inflationary environments. Low correlation to other asset classes. reasonable performance against traditional assets classes long term. Farmland is an underinvested asset class because access and execution are difficult. I came back home inspired by what can be achieved from professionally run commercial operations. Yes, we in the UK may struggle to gain economies of scale, but sometimes diseconomies emerge. As a Yorkshire farmer, the main commercial lessons I learned were the financial returns from the asset of bare land need to be identified and separated from the financial returns from active farming. The benefits of a non-executive director in large-scale corporate agriculture. Likewise, the access to a trusted third party, whether it's a farmer or consultant at UK farm level, at the very least, to carry out a reality check is important. We are in a global market. Beware of complacency. Risk management is more important than ever. And grass can look greener elsewhere, but land ownership rights, political stability, and our legal system in the UK are exceptional. Post-Nuffield. Big changes will occur in this little piece of Yorkshire, thanks to lessons learned from around the world. I've already become involved in benchmarking our farms against other English arable farms. Though not a big enough business to employ a non-executive director, I do intend to have an outside individual challenge what we do and look at our strategic direction on a more regular basis. I will continue to improve the aesthetics, biodiversity and environment in which we farm. I intend to increase my involvement within the NFU and hopefully get involved with one of their committees in the future. I intend to be more supportive of GM crops in the future after seeing firsthand the advantages of their use in both Argentina and Australia. The huge potential to reduce chemical usage and improve crop yields by the ability to adopt new techniques was indeed an eye-opener. On our own farm, I will continue to look for opportunities to expand, not only through the traditional methods of buying or renting, but also contract farming. The high capital cost of land ownership in the UK will certainly limit our own ability to expand if purchasing was the only option. My Nuffield journey has taken me out of my comfort zone and will certainly impact on the way I view and manage my farming business in the future. I wish to sincerely thank my sponsors, the Yorkshire Agricultural Society and Nuffield for this great opportunity. Thank you very much.